Fortunately, this guy doesn't have to worry about such things. Charlie Gasparino, what he's saying, Charlie, and what other CEOs have been saying is we hear you on more U.S. jobs. We hear you on having more consumer-friendly products and a more U.S.-friendly environment. But we can handle it. We don't need the government handling it.
Well, I mean, I tend to agree with that. The devil's is in the details before. I mean, we have to wean ourselves off a system right now that is heavily government-related with price controls, and, you know, you can't get a...
But isn't the president making it more that way? Or risking doing that?
We don't know. We don't know what his health care plan is all about.
Beyond just the mandates on this, when you mandate stay in the U.S., keep jobs here in the U.S., you know, Allergan is famous for incorporating in Ireland for the lower rate, and Pfizer wanted to do the same thing when it wanted to buy them and locate there. They ultimately canceled the merger. I think President Obama said this is horrific. It's not going to happen. Will they have any friendlier environment under this president? I doubt it.
Okay, but I think the equation is twofold. I think part of it, I'm not for threatening companies, you know, to destroy their stock price, because there's all these with President Donald.
You can't call him Donald anymore. I know you're close to President Trump.
It's very hard. You know, I'm breaking out in a rash right now. Well, when the president...
What do you think of that fat contouring drug? Isn't that cool? You freeze it, and then
you know, I'll tell you, I don't mind losing a few pounds, you know. But you know, Neil, there's two parts of the equation here. There's some of that stuff which I think is not good, telling businesses where they should relocate. And by the way, border taxes will hurt the U.S. consumer because it's going to cost us more money. If you can't import cheaply, guess what? You can't build stuff here in the U.S., and that becomes a problem. You
know, they argue because they watch this show. They argue, well, you know, you forget to point out, which we always point out. More than offsetting that are the lower taxes, lower regulations.
Well, that's the point I was going to make. Then you got to look at the second part. Is that if he does lower taxes, lower regulation, getting government out of the healthcare business. Listen, remember the EpiPen? People, it was a huge controversy about the price of this thing. It was gazillions of dollars. Well, it's a technology that's like building a chair, right? It's not exactly, you know...
But they came up with it.
Okay, they came up with it, but it's not exactly, you know, nuclear physics that came up with the EpiPen. Why can't there be generic models of the EpiPen, which helps bring down the cost for people who actually need it and can't afford thousands of dollars for an EpiPen? And I think those are some of the things that will be the trade-off between, you know, the sort of mercantilistic, anti-trade instincts of Donald Trump and his other...
What is your gut? You're pretty good at this stuff. What's your gut say? Because their argument, the administration's argument has always been, you slash corporate taxes to the degree we want to do. You bring the corporate rate down to 20% from almost 40%. The top rate from over 40% with Obamacare surtaxes to 33%. You're solving a lot of ills there, even with the protectionist bent we might have.
I agree to a certain extent to that. I mean, I don't know the exact where it's going to come out, but I will tell you, this market right now, Dow 21,000, which is essentially where we're at, really is saying the economy could grow by $3 trillion.
So what if we don't have these tax cuts paid for? We have them, but they're not paid for.
Forget about paid for. I think the market likes the stimulus. They believe that if you don't go crazy on infrastructure and all, there will be stimulus, the economy will grow, and that will help.
Even short-term deficits would be okay.
Well, I think so, and I think you're going to get a revenue boost from it. The problem is when you go crazy with other stuff, and it's too much fiscal stimulus, and it's too big of a deficit right off the bat. That's when bond yields start rising.
But you don't equate. I'm sorry to keep interrupting. Just to be clear, you don't equate paying for spending like you would paying for, let's say, a tax cut.
I wouldn't do it right now. I don't think you need to do it, because if you keep it in line, then you won't get the long bond, the 10-year, spiking. If the long bond doesn't go up, the interest rates don't go up too much, well, guess what? People will keep buying stocks. The economy won't slow. And if the economy doesn't slow, then you'll get revenues. And by the way, this isn't me saying, this is investors.
But don't you think all of these financial stocks are showing that have run up so fast and appreciably, betting on a market rally, no doubt?
They're betting on him doing his tax cuts, a corporate tax cut down to 15 or 20%.
I understand that, but if they all of a sudden produce a budget that shows deeper holes in the near future before they get revenue from this, how's the market going to respond?
I think it's less the budget than the tax cuts. If he backs off, if he justifies building a wall by cutting the corporate tax rate from 35 to, say, 30, this market is going to sell off. That's what they're looking at. They're looking at stimulus. Stocks are looking at stimulus.
So don't cool it on the tax cuts. Far from it.
I would cool it on the infrastructure, let the economy pick up. We know that infrastructure, listen, we may need infrastructure. It's never a really good bang for the buck in terms of the economy. You know, President Obama spent nearly $1 trillion, $800 billion. We didn't get the job growth that he suggested we would. That every BS analysis that came out of the budget office said we would get job growth here, here, and here.
Your father was into construction, right?
My dad was an iron worker.
Okay, so
Weilather, to be exact.
You're dismissing your past.
No, I'm just saying what works best. You know, does it work best to get the economy going and then doing infrastructure, or letting states pay for their own infrastructure as their state economy is going? Or where do you get the bigger bang for the buck? And all these, by the way, in the years of infrastructure spending in New York, we still have lousy infrastructure. We still have a high unemployment economy outside of New York City, which is propped up by the banks and real estate. Go up to upstate New York. I mean, this is a state that spends all this money on infrastructure. There was a great story called the Tunnel to Nowhere, that the Port Authority of New York built this tunnel out there, I think it was JFK, that was nothing. It was just a make-work project. You have to be really careful with that. The private sector actually allocates capital better, I believe, and the studies show it. And I think if you're worrying about the markets and growing the economy, then you really need to worry if Donald Trump steps away from his personal income tax cuts
or dials them back.
Or dials them back, and the corporate tax, because this Dow 21,000 is factoring $3 trillion of extra GDP growth. We're at 16, 17.
Did you just make up that number?
No.
Yes.
No, I talk to people every day.
Who made up that number?
These guys are rich because they don't make things up.
Okay.
They actually get stuff right.
Seems like you're defending them and you didn't check it out.
You know what? You hate prosperity.
No, I hate you.
You're jealous of people who are successful. You, Barney,
You're right.
Barney Frank, Elizabeth
I've
Warren.
often been compared. Yeah.
You know, you guys, all you liberals are in the same boat.
You're just incorrigible.
Sean Hannity, all you guys.
All right, thank you.
Eric Bolling, you better cut me off.
Just keep it going. You're on a roll here.